In exercise 4-4, we're going to put together the bottom part of the income statement for Diamond in the Rough recruiting group. So we'll be focusing on how to do the disclosure for the discontinued operations. So I'll give you an opportunity to read through this problem. Just put me on pause, and once you're finished reading it, then we can work through the problem together. Okay, so the first part that I would do is just do the template for the income statement. So we'll name the company, so Diamond in the Rough Recruiting Group Inc. And I normally just like to have the name of the company a little bit bigger than everything else. And then we'll call this the statement of earnings. So remember, this is the income statement. Some companies call it statement of earnings or statement of operations. And then for the year ended December 31st, 2020. So for this company, their year end is 2020. So we're doing it for the year. So you would have your income before income tax, or your income from continuing operations before income tax. Then you'll subtract your income tax expense, and then you'll end up with your income from continuing operations. So that's where we would leave off on a regular income statement. Now, if the company qualifies to disclose their discontinued operations separately, then this is how we would do it on the income statement. We would have our discontinued operations, and then you would have your net income or loss from the operations for the year. So we'll just say income from operation of discontinued division. And we always do that net of tax. And then if you disposed of any assets, we would record the loss or the gain down here as well. So loss from disposal of division equipment, net of tax. And then we will have our net income. So let's see what the question actually gives us, and then we can just start filling information in. So it says here that income for Diamond was $91,000, and we have a 30% income tax rate. So I can put the $91,000 in right here. So $91,000 just at the bottom. Okay, and I'll just do a reminder here that this is given. Now let's see what else they gave us. So they told us that income from operations of the blue division accounted for $4,200 after tax. So they gave us this number here. So we can go ahead and put that amount in. So under the discontinued operations, I have income from operations of discontinued division, and they said it was net of tax, so I can put that amount in. And I'll just make a note that this one was given as well. And so what I'm missing here is the loss from the disposal of the division equipment. So if you remember, the company can write the equipment down and then move it as an available for sale asset. So when they do that, they're going to restate the equipment. So remember, it's the lower of the carrying amount or the fair value less the cost to sell. So our carrying amount is given to us. So it says the equipment is the division's only assets and has a carrying value of $25,000. And the board believes that proceeds from the sale will be approximately $5,000 after the auction expenses. So the fair value is $8,000. So I'm assuming the auction expenses were $3,000. And then we would do the lower of the fair value minus the cost to sell. So that's the $5,000, or the carrying value of the $25,000. So the carrying value was $25,000. The fair value less cost to sell is the $5,000. And both of these are given to us. So I'll just write given. And the fair value is lower. So because it's lower, we can write this down now. So if I do 25,000 minus 5,000, then the journal entry would be a debit to the loss and then the credit to the net asset. So then this 20,000 is the amount to write down before tax. So now when I put it into here, the loss from disposal of division equipment, I have to do that after tax. So what we can do is just put in 20,000 times, and to get it after tax, just do 1 minus the tax rate. So 1 minus 0.3. So that will give me 14,000. So all I did is I took the 20,000 times 1 minus the tax rate to get me after tax. And remember that 20,000 was the write down. So I can add those two together and just put it right there. So the discontinued operations is a loss of 9,800. And now we can just work backwards from our income statement. So the income from continuing operations would be the 91,000 and then just minus everything on the opposite side of the line. So that's 100,800, and I just plugged that. And now my income tax expense is 30%. And our income from continuing operations before income tax would just be the 100,800, and then just divide that by 1 minus the tax rate. So that will gross that up. So then I have 100,800 divided by 1 minus the tax rate. And then we can take the 144 times the tax rate to calculate the taxes. And then what I would do is just check that that actually works out. So the income from continuing operations is the 100,800 just down there. So that's perfect. And now I'm done. So this one was a little bit tricky only because I had to work backwards on my discontinued operations statement. But sometimes they'll give you all the information so we can start with the income from continuing operations and then work down.